2.8. Again, that is not a prediction, but we'll see. If you do get a jump above forecast, I think that has some concerns, right? If you have, okay, so 1 minute to go. Let me go ahead and switch over. We'll see. Again, I highly discourage personally the approach of, oh, we got 30 seconds. Let me throw my whole account into gold shorts or gold longs or NAS longs, NAS shorts. Like I don't play that game. I don't scalp. I think it's a really silly one, and swaps or spreads go crazy on brokerages. So you're going to pay the brokerage if you try and do that stuff. In the end, it's a total gamble, in my opinion, to try and predict with 1 minute to go where the price is going to spike, because you could get both directions. You could spike up, spike back down, but stick around, because after it, we're going to actually be talking about what this data means on a fundamental level and where trends may be going in the next day, week, and even month. So coming in just about 10 seconds, we're going to get the consumer price index number. Let's see what we get for the prior month. Coming in hot. Let's see. About 9 seconds to go. We will see. All right, the consumer price index just released, at least an initial push lower here in stocks and in gold. Gold muted though. Dollar index higher. Stocks initially pushing down, but finding some resilience here. Look at that quick bounce. That's what I mean by, again, it's very hard to trade the spike itself. Price spiked lower, immediately shot back up. Let's take a look at the number, 2.9%. So reading came in line with expectations. I'm seeing it in the chat from you guys. So 2.9% pretty much came in line with expectations. Slight higher than expected uptick in the month-over-month reading. Unemployment claims is the story here, guys. Look at this. Uh-oh. Ladies and gentlemen, that is not what you want to see. Look at this. Disregard CPI for a second. That's a big uptick in unemployment claims. Unemployment claims went from a forecast of, we went from 237. We just jumped up to a weekly jobless claims of 263. Rate cut probabilities are up for sure off of that. Consumer price index came in line with expectations, so that's kind of not a big thing. But this, pay no mind to the man behind the curtain, because that's the man behind the curtain. Look at that. 263,000 jobless claims. That's a spike that we have not seen in a minute. That is a little bit concerning, to say the least. So I think the market is saying, oh, yeah, we got rate cuts. Take a look at that dollar index moving lower here. I think the market is sobering up to what it just saw in the unemployment claims. Nick's jacket looks like he trades bonds. Lee, you and Ball Out both said that. It's funny. Wow. Guys, that is pretty surprising. I was not expecting that out of the unemployment claims. That's yeah, look at that. Rate cut city. That's where we're headed, ladies and gentlemen. Rate cut city. That unemployment claims, that is, you don't mess around with that. 263. Typically, when you start to see unemployment rate, the percentage basis rising, it starts in the unemployment claims. That looks like a pretty good start to me. Again, these numbers, they don't move that much. So let me show you. What's up, Garrett? Good to see you, my friend. 10-year at 4. Yeah, look at that, guys. We went to the same spot, Garrett. Check this out. 10-year just dropped like a rock. You know why? Again, today we met for CPI. The real story is unemployment claims. Right then and there, we just spiked on unemployment claims. That's big stuff. Check this out. So I don't have the data real time. I wish I did, but this will update within the next 30 minutes or less. But unemployment claims. So we are expecting 235. Guys, this is going to break our chart today. That's going to push us right on up to up here. Unemployment claims just blasted. Okay, that's That's a warning that we have got to pay attention to. You had unemployment claims rising the last few weeks. That's a spike. Gold and silver. That's it. I'm staying long gold and silver. I think to me, it's the best spot to be in. Not financial advice ever on this channel. I'm just sharing what I'm doing, but this brings me back to where I feel more comfortable, which is metals to the upside. Lee, okay, I get you. Wow, that's crazy, man. But that's what it looks like, guys. That's when you actually have jobs data deteriorating, the claims will start to show up. Really, really scary stuff. The labor market has been in decline for some time, and we've been on the lookout for a minute for what just showed up here, in my opinion, which is a jaw drop moment where you get, oh, unemployment claims, that's spiking. So again, stocks initially okay with, all right, we've got in line with expectations inflation. But again, this just extrapolates further where I am at with this stuff, which is stocks at all-time highs with spiking unemployment does not match up for me. I've said this 1,000 times. I'm not short the market and have no interest in shorting an uptrend. But what I feel way more comfortable at this moment is long silver, long gold, which is where I have been because the fundamentals have been suggesting for a minute now, right? If you follow along, if you're here every day, right? If you're here every day, you know what we've been talking about. The dollar looks weak. The data suggests it looks weak. Many traders, many investors, many people are just ignoring this stuff. And to me, chasing stocks into an environment where the dollar has severe weakness ahead, in my opinion, I mean, it's already been weak, but continuation to the downside, this is concerning to me. So again, I'm not short the stock market, but I am long gold and silver because I think the dollar has more downside. If I'm wrong, that's what stop losses are for, right? If I'm wrong and silver drops dramatically, I'll trail out. But I do think that gold and silver are going to continue their run. They may have a pullback. They may retest some areas of support. But all the recipe here suggests inflation is sticky and that unemployment claims data is sour. That is not what you want to see. 263 is a noticeable tick up. This is a weekly number that we get. So it's not like a whole month goes by and then we get hit with a shock. This is 1 week to, 1 week significant change, right? So to me, this signals gold and silver are the most attractive spots in the market on a risk adjusted, on a risk to reward potential basis. That's the spot. Owners family, thank you very much for the €2. I very much appreciate it. I don't ask in any way or expect any sort of donations from the stream, but I appreciate it. The bigger thing is if you really wanted to support the stream, you should purchase a copy of the Edge Finder, not just for the stream, but for yourself. It's a tool that helps you to track institutional holdings, positionings, as well as what the economy is truly doing. Most people completely just guess on what the economy is doing because they just read a news article